Is America's retail landscape about to face its biggest transformation in history? In a shocking turn of events, some of the most iconic American retail chains are teetering on the brink of extinction. What's even more alarming is that these aren't just any stores. These are household names that have been part of the American fabric for generations. The retail apocalypse that began years ago has accelerated dramatically, with inflation, changing consumer habits, and the aftermath of the pandemic creating a perfect storm. Today, we're going to dive deep into 15 major American chains that financial analysts predict won't make it through 2025. And the reasons behind their imminent downfall are more complex than you might think. Let's start with Bed Bath & Beyond. Oh wait, they're already gone. That's exactly how fast things are moving in this retail massacre. But who's next? The first on our list is Party City, which filed for Chapter 11 bankruptcy protection in January 2024 and is now closing stores at an unprecedented rate. With over $1.7 billion in debt and competition from online retailers, the party's literally over for this once dominant celebration supplier. Tuesday morning, another retail giant is following suit. After attempting to restructure and emerge from bankruptcy in 2020, they're back in trouble. The discount home goods retailer has announced the closure of all remaining stores by summer 2025, marking the end of a 48-year legacy. JCPenney, despite previous restructuring efforts, is showing alarming signs of distress. Their foot traffic has plummeted by 47% compared to pre-pandemic levels, and their attempts to modernize have failed to resonate with younger shoppers. Financial analysts predict they'll be forced to liquidate by the end of 2025. Fourth on our list is GameStop. And this might surprise some given the meme stock frenzy of 2021. However, the digital gaming revolution has left them struggling to adapt. Their recent quarterly reports show a consistent decline in sales, with a 10% drop in the last quarter alone. The company has already closed 1,000 stores since 2019, with more closures expected. Rite Aid, once a pharmacy giant, filed for bankruptcy in October 2023 and is continuing to struggle. They're closing hundreds of locations, and their remaining stores are showing signs of severe financial distress, with mounting competition from CVS and Walgreens, plus Amazon's entry into the pharmacy space. Their future looks increasingly bleak. Express, the fashion retailer, is next. They've recently announced the closure of 100 stores and are exploring strategic alternatives, including a potential sale. Their stock has plummeted 95% over the past year, trading below $1, putting them at risk of being delisted from the NYSE. Seventh on our list is Joann Fabrics. The craft store chain is drowning in debt, with their stock down 90% since going public in 2021. Their latest financial reports show a concerning 27% drop in quarterly sales, suggesting they might not survive the year. Big Lots is experiencing similar troubles. The discount retailer has seen its share price collapse by 80% in the past year, and they're burning through cash at an alarming rate. They've already announced the closure of 50 stores, but industry experts suggest this might just be the beginning. Dollar Tree, despite its seemingly recession-proof business model, is showing cracks. They're closing hundreds of Family Dollar locations and struggling with inventory management and pricing strategies. Their recent decision to raise prices above $1 has alienated their core customer base. 10th on our list is Petco. The pet supplies retailer is facing fierce competition from online retailers and struggling with high debt levels. Their recent quarterly earnings showed a 70% profit decline, and they're closing stores nationwide. Academy Sports Plus Outdoors is next. Despite a boom during the pandemic, they're now facing declining sales and increased competition from Dick's Sporting Goods and online retailers. Their store closure rate has accelerated in recent months. Five Below, the discount retailer targeting teens and tweens, is showing signs of trouble. Their growth has stalled, and they're struggling to maintain their $5 and below price point in the face of inflation. Store closures are expected to begin by mid-2025. 13th on our list is Michaels. The arts and crafts retailer is battling high debt levels and declining sales. Their private equity owners are struggling to keep the company afloat, and bankruptcy rumors are circulating on Wall Street. Burlington Stores is facing similar challenges. Their off-price model is struggling in the current retail environment, with sales declining and store closures accelerating. Their attempt to compete with TJ Maxx and Ross has largely failed. Finally, we have Men's Warehouse. The formal wear retailer never fully recovered from the pandemic's impact on office culture and formal events. Their parent company, Tailored Brands, is showing signs of financial distress again, despite emerging from bankruptcy in 2020. The implications of these potential closures are staggering. We're looking at potentially hundreds of thousands of job losses, millions of square feet of empty retail space, and a fundamental reshaping of the American retail landscape. The ripple effects will impact everything from commercial real estate to local tax bases. What's particularly concerning is the speed at which these changes are happening. Many of these companies have been in business for decades, some for over a century. Their potential disappearance represents more than just business failures. It's a transformation of American consumer culture. So what can we learn from this retail apocalypse? The key takeaway is that no business is too big to fail in today's rapidly evolving market. The combination of e-commerce, changing consumer preferences, and economic pressures is creating an environment where even established brands must adapt or die. For investors, this serves as a stark reminder about the importance of diversification and the risks of investing in retail stocks. For consumers, it might be time to use those gift cards and loyalty points before they become worthless. And for employees in these sectors, it might be wise to start planning for alternative career paths. The retail landscape of 2025 will look dramatically different from what we see today. These changes aren't just affecting individual companies, they're reshaping entire communities and changing how Americans shop, work, and live. The question isn't whether these changes will happen, but how we'll adapt to this new reality. What do you think about these predictions? Have you noticed changes in your local retail landscape? Share your thoughts in the comments below, and don't forget to subscribe for more insights into the changing world of business and retail.